Hey everybody, Chuck Barone here. It is Wednesday, January the 17th, 2024. This year, 2024, not much different than 2023, right? Crazy, upside down, confusing, no direction, uncertain. There's a whole bunch of different adjectives. When bad news is good news, when good news is bad news, the world's off its rocker, and that's nothing new, I guess, right? Anyway, before I get rolling here, I got a lot today. Let me just welcome everybody to the show. And as always, thank you guys for your support. We appreciate you guys being here every day. All right, so let's talk about these crazy markets today. So when we closed out the year, and today is already January 17th, so we're moving into 24 pretty quick. But when we closed out 23 and into this new year, the consensus pretty much was the inflation fight is won. We're factoring in all these rate cuts starting in March. So that's like right around the corner the way the calendar pages are turning, right? And everything looked beautiful, man. You know, employment was still decently strong. The economy seemed to be moving along okay, not recession, where you have to have cuts for a recession to spur growth. The Fed looked like it had a beautiful hand to play. And all of a sudden, the whole psychology changed. And why? Because we're getting good news on the economy. It's just the craziest thing ever. So jobs have been the main culprit, right? The hot jobs market showing strength in the economy. Of course, as we've talked about ad nauseum on this show, how the Fed believes that strong jobs are a big driver of this inflation, wage growth being the main reason. And now, retail sales. Well, people are spending money, go figure. And retail sales come in hot. Market takes that as bad news. And the markets react accordingly. So listen to these numbers today. The Dow falls 94 points, 37,266. NASDAQ falls 88 points, 14,855. And the S&P, the broader market, falls 26 points, 4739. So we were looking at some numbers on the markets moving toward record territory everywhere. Huge winning streaks, a great year for returns. And now everything just... Now granted, anything could turn this around again. The market, again, has no direction. So we're basically flying blind. These day-to-day fluctuations, I would tell you guys, I wouldn't pay attention to that so much. Look at the underlying numbers. If it goes up 100 one day, down 100 the next, you're still at the same number. So it's not like the markets are having these big declines. They're just gyrating up, down with the whims and the news and the rumors, right? So, things are going to probably work out all right. We'll see where this economy goes. The funny thing is the Fed, typically the Federal Reserve is not going to cut interest rates when the economy is growing. Now, this isn't a normal world. We don't live in that anymore. But in a normal world, when the economy is rolling along, the Fed's not going to mess with rates until the economy gives them a reason to mess with rates, right? I guess that's out the window now. So look at this bond market today. The 10-year, now at 4.10, 4.10, up 4 basis points. The 2-year jumps 13 basis points today, now at 4.36, 4.36. So these numbers, which had been coming down, now we're back into this wild volatility, rates reversing themselves. As we've been talking about, this demand for bonds is there, but the supply overwhelming that demand. So that's going to force rates higher to entice buyers to part with cash to buy more bonds, right? So bond market's showing that. Here it is. The dollar today basically unchanged, up just fractionally, like 2 basis points on the index. 103.38 for the dollar, a good strong number, not coming back down. Of course, that puts big pressure on gold and silver. Gold falling today, down $22 20 cents, now sitting at $2,005.40 for an ounce of gold. Silver falls 36 cents today, now sitting at $22.52 for an ounce of silver. Big pressure on those with that stronger dollar, strong economy. I'm surprised, honestly. I really believe silver should be at 25 bucks. I think gold, any number above 2,000 is probably fairly priced, but it looks like we're going to test that number again at 2,000. We'll see if it holds that support. Silver just seems to be running in place, going nowhere fast. So we'll see how this dollar, where it goes, and as it changes, so too will gold and silver. Oil today up very small, up 46 cents a barrel. Now sitting at $72.86 for a barrel of West Texas Intermediate. Right where we expect it to be. We've talked about this a lot of times as well. Oil seems to be most comfortable in a trough between 70 and 75. That's exactly where we are. Until it breaks out one way or the other, it's what the day-to-day happenings are really non-event. Bitcoin falls again today, down $795. Now at $42,675. Still a really strong number for Bitcoin. Surprisingly, I guess the big run-up was the anticipation for the exchange-traded funds. Now that they've got them, the big rally seems to have stalled. Goes back to the old Wall Street axiom, buy the rumor, sell the news, right? So Bitcoin, let's see where it goes now. Let's see what kind of volume these ETFs are going to generate. That's going to tell us a pretty good story about where things are going to go with Bitcoin. All right, so let's talk about news today. Of course, the big news that everybody talked about, retail sales. That's the big number today. Retail sales jumping 0.6% in December. That's a big number, man. Merry Christmas to everybody, apparently. Analysts, experts expected 0.4%. So that's 50% higher than what they anticipated. That's pretty amazing, right? Sales last year for the year growing at 5.6%. So retail sales having a pretty strong year last year. Good solid number. And that's, considering how expensive everything seems to be, I don't know, maybe they're buying the same amount of stuff and that growth just reflects the difference between the inflation rate and the wage gains, right? 5.6%. Okay, there's your, they're buying the same amount of stuff, just paying more for it. It's amazing, though, because the economy just seems to be just chugging right along. And this is going to give the Fed a reason, or for lack of a better word, I guess, to slow things down on these rate cuts. Like I said, the Fed typically isn't cutting rates unless there's a reason to. Rates are high. Is a complaint that rates are high is typically not a reason to, especially with the economy still going great guns, right? Crazy, crazy situation because the market is desperate for these cuts. And at the same time, we keep getting news like 5.6% sales growth for the year and crazy. Consumers feeling pretty positive about how things are going to go. Feeling like 2024 is going to be a good year. Obviously, they're spending freely. So this is a really good sign for the economy. Unless, like we do on this show, we look at the whole picture, not just the moment. And you look at declining savings, not just savings accounts, people spending their savings accounts down, but the savings rate has been falling down dramatically since COVID ended. Then you add in record levels of debt, and that's not just for consumers. There's record levels of debt everywhere, from the federal government, state governments, municipalities, corporations, businesses, everybody upside down, and then the consumer, $1 trillion, more than that, $1 trillion in credit card debt. Bank's going to get fed on that. Average interest rate, 22%. So we'll see, guys. How long can all of this last? Something's going to give one way or the other. The economy going great, of course, unless you're in the real estate business or the mortgage business. I guess realtors still eking out a living at their listings. But fascinating stuff with retail. I don't know. I seemed like I spent about the same amount as usual for Christmas last year. My family seems to have. What about you guys? Did you spend more on Christmas, less on Christmas? Did you, what do you think about this number, man? And do you think that the Fed should be cutting rates while the economy is strong? Because they're already factoring in March. You think if 2 months is fast enough to get us into a recession from where we are now? GDP grew pretty good last year, right? Crazy times, man. All right, and moving on, real estate, right? Builders, the other side of the business, you have new builds and then you have existing housing. New builders have actually been doing okay. It's the existing housing that's been the big trouble. New builds, real builders offering incentives, rate buy downs, and special deals on, stuff for in your house. We'll give you all the appliances. We'll give you the granite countertops. We'll give you flooring. We'll give you whatever incentives are needed. So their sales have stayed, all things considered, decently strong. And they came out with the Builders Index today, shows a lot of confidence for 2024. The index rose 8 points, now sitting at 44 on the index. And what that means is it's still not great, but it's significantly higher. Last year, 1 year ago, the rate or the index sat at 35. So it's a pretty significant move, right? All three gauges that they look at for this builder study were up. Current conditions, people buying houses, future sales, with mortgage rates coming down expected to be robust. We know there's demand. And of course, traffic, that's the big thing they look at, is how many people are coming out to look at those new houses, and traffic for viewings, all up. So with mortgage rates coming down, it looks like builders, at least, have a shot at a pretty good year this year. I think existing housing is going to be a little bit tougher because there's just no supply. Supply's starting to go up here in Las Vegas, at least, but still small. I think there's around 7,000 houses. That's about less than a 1 month supply. They would like to have a 6 month supply. Consider that a normal market. It's just, with where mortgage rates were and where they are now, nobody wanting to sell their house, get rid of their 3% mortgage, to buy a new house at 6% or 7% mortgage, because the trade down doesn't pay off. You get a smaller house, but you get the same payment or bigger. So people are reluctant to do that, not listing their houses, not much supply, keeping prices high on existing housing, making it very little opportunity for buyers, especially first-time buyers, which is where I do most of my business, completely shut out of this market still. Anyway, short show today, guys. Tomorrow will be a big day. We'll get unemployment numbers back to back with retail. Could be big news. We're going to be here to bring you guys the news you need. We appreciate your support. If you guys could, please hit the like button. It changes the algorithms around, and it gets our video out in front of a few extra people, gets us a few extra views. We could use that. We appreciate it. As always, we'll be back tomorrow. Hit me up. I'll be on comments today. I'll spend a little bit of time with you guys. Hit me up with your comments and questions. We'll be back tomorrow to bring you the news you need. Until then, my friends, take care. Thanks.